Iran possesses the world's third largest oil reserves, the second largest natural gas reserves, and a strategic position controlling the Strait of Hormuz, which sees 20% of the world's daily oil shipments, along with vast agricultural lands and a young workforce. Iran should have been a superpower, but it's now on the brink of collapse, and here are the 12 reasons why. 1. Iran's economic outlook for 2025 to 2026, from top-tier potential to a stark recession. With 92 million people, Iran was among the top 17 economies by GDP in the early 2000s. However, in 2024-2025, its USD-based GDP is only about $437 to $463 billion, and IMF forecasts suggest real growth in 2026 could be just 1.1% or lower due to the conflict. Average inflation in 2025 exceeded 42%, with the Rial severely devalued, reaching over 1 million Rials to 1 USD on the black market. The U.S.-Israel war, which began on February 28, 2026, sent global oil prices soaring while disrupting Iran's oil exports, leading to an additional loss of tens of billions of dollars in the first week alone. 2. The Bonyads and the Revolutionary Guards (IRGC) system, controlling 20% of the economy and hindering growth. The Bonyads, large charitable foundations, and the IRGC control about 20% of the economy, including agriculture, the auto industry, transportation, and energy. These entities operate outside the normal tax system, reporting only to the supreme leader, which leads to inefficiency, corruption, and the misallocation of resources. As a result, private businesses are squeezed out, and foreign investment has withdrawn. By 2026, the infrastructure managed by the IRGC became primary targets in airstrikes, causing massive asset losses and disrupting domestic supply chains. 3. Massive subsidy policies and the energy paradox. Iran spends about $100 billion annually on subsidies for fuel, electricity, and basic foods. Despite having over 300 sunny days a year, solar power accounts for less than 2% of total output. Frequent power outages, 2 to 4 hours a day, cost the industrial sector $2 to $3 billion a year. The 2026 war worsened the situation as power infrastructure was directly attacked, leading to widespread blackouts and large-scale production halts. 4. Water crisis and desertification, a long-term risk to sustainable growth. Two-thirds of Iran's territory is desert and high mountains. Poor water management has led to depleted groundwater, forcing people in many areas to receive water by tanker trucks. Agriculture, a major share of GDP, is in sharp decline, causing the internal migration of millions of people. This is an internal problem, not just due to sanctions, and the war has exacerbated it by damaging irrigation infrastructure. 5. International sanctions and self-sanctioning, a financial downward spiral. Iran is one of the most heavily sanctioned nations in modern history, cut off from the international banking system and advanced technology. Oil exports must be sold at a discount through intermediaries, primarily China, or on the black market. At the same time, import bans on certain goods have fueled smuggling and increased domestic production costs. By March 2026, the threatened closure of the Strait of Hormuz pushed global oil prices up, but Iran could not capitalize on it as its exports were completely halted. 6. Inflation, exchange rates, and social consequences. The black market exchange rate has surpassed 1 million Rials/USD. Point-to-point inflation reached 52.6% by late 2025, and the minimum wage doesn't cover basic expenses. People have turned to investing in gold, real estate, and stocks to hedge against inflation. Restrictions on social media have also caused estimated losses of billions of dollars in e-commerce and access to financial information. 7. Historical turning point: the 1979 revolution and the shift in priorities. Before 1979, Iran had double-digit growth, a stable Rial, 1 USD, approximately 70 Rials, and technological cooperation with the West. After the revolution, the economic model shifted to prioritizing the export of ideology, leading to international isolation and skewed budget allocations. From 2012 to 2020, the cost of supporting proxy groups, Hezbollah, Houthis, Hamas, was an estimated $16 billion, not including military spending and the nuclear program, which consumed over 12% of the national budget. 8. The cost of war and its impact on the state budget. The 2026 war pushed military spending to record highs. Airstrikes targeting infrastructure caused hundreds of billions of dollars in direct damages while paralyzing the oil and gas industry, the main source of budget revenue. The IMF and World Bank predict Iran's economy will continue to contract in 2026, with inflation threatening to exceed 60% if the conflict continues. 9. Brain drain and missed tourism potential. Iran loses an estimated $150 billion annually due to intellectual migration. Tourism, with its thousands of years of cultural heritage and diverse landscapes, is nearly paralyzed due to its international image and security risks. If the conflict ends and the country opens up, this sector could generate tens of billions of dollars in revenue, but it is currently completely buried. 10. Corruption and ideological priorities, the two main structural barriers. Systemic corruption within state-owned entities and the priority of exporting revolution instead of domestic economic development are the root causes. These factors not only reduce the efficiency of resource allocation, but also erode the confidence of foreign investors. 11. Future outlook, a wake-up call or continued decline. Iran still possesses abundant natural resources and a young population. However, recovery requires deep reforms, making the bonyads and IRGC transparent, reducing inefficient subsidies, opening up trade, and prioritizing economic development over conflict. The 2026 war is the harshest test for Iran's economy. If the parties reach a ceasefire agreement and implement structural reforms, Iran could return to a growth trajectory. Conversely, a prolonged conflict will push the economy into a deep and prolonged recession. This analysis is based on public data from the IMF, World Bank, and reputable economic sources as of March 2026. Iran's economy is a classic example of how internal mismanagement and geopolitical conflict can destroy the potential of a resource-rich nation. We will continue to monitor and update key financial indicators in our upcoming analyses. What do you think? Will Iran become a true superpower? Or will it remain the sad story of a country that had it all and lost everything? Comment your thoughts below. And if you want to know more about other countries that also should have been rich, like and subscribe to our channel so you don't miss the next episode.